Hey there, it's Scott with Scott Talks Investing. In today's video, I want to walk you through how to go from active real estate investment ownership to a passively held real estate investment while still receiving monthly income as well as deferring all capital gains taxes from the sale of your property. This is essentially a way for investment owners in the real estate space to step away from actively managing their rental property portfolio to being completely passive while still receiving that monthly income. So, in this scenario, we're going to go ahead and sell a rental property. We're going to utilize the 1031 exchange tax code to defer all capital gains taxes and reinvest into a Delaware Statutory Trust, or otherwise known as a DST, which is a fractional ownership structure in a large commercial type building. In this scenario, we would illustrate this with a large apartment complex that is professionally managed, owned, and operated by the DST fund itself. And in doing so, you get to sit back, relax, and not have any active participation in the ownership structure or maintenance of the property. And you get to collect true mailbox money in the form of monthly distributions that would likely be directly deposited to your bank account. And in doing so, you have the ability to do whatever you want. You're not going to have any active participation. The average length of time in ownership of this type of structure is 5 to 10 years. However, that can vary based on market conditions as well as the projected returns. So, one of the great things about a DST is you can also 1031 exchange back out of the DST if you elected to go back into what I often refer to as brick and mortar investment property ownership, and you would still not be paying any taxes in the form of capital gains taxes and or any taxes. Really, you're deferring all of those taxes to a future date. In the state of California, which is where we're located here in San Diego, if you keep deferring those taxes and you were to go ahead and pass the property on to your heirs in the future, they would receive what's called a step up in tax basis, and they could relinquish that property or sell that property and not pay any capital gains taxes based on what the fair market value of that asset would be at the time of passing. So, utilizing the 1031 exchange greatly helps pass along future wealth to your heirs and for generations to come. Utilizing the DST is one vehicle in which you can step away from that active management of real estate. If you're tired of being a landlord, if you just want to sit back and have a monthly check come in through the mail, so to speak, the DST might be a great option for you to explore. If you'd like to learn more about it or have any questions, please drop a comment in the comment section below or send me an email. You can see my email in my profile there. And if I can be of help in any capacity, please do reach out. That's what I'm here for. And I look forward to having further conversation, and check out some of my other videos related to real estate investing, basics of the stock market, and some crypto investing as well as best fit for what you're looking to accomplish. Thanks for stopping by. And again, this is Scott with Scott Talks Investing. Have a great afternoon.